Questions?
I hope this is appropriate, Del, but you basically historically are a lender.
Right.
And I know you guys make wheelbarrows full of money when you were actually representing lenders.
Yep.
Right?
Pretty well.
Okay. Now you're in a little different role where you're helping different workout situations. Are you compensated as a consultant, or are you compensated on a percentage basis, or how's that?
You know, it's kind of all over the board. I mean, you know, in the case of this downtown bank building, this guy actually was a silent investor. He's not on the note. Some local guys are, but the local guys were mismanaged, didn't pay the taxes and didn't pay sales tax and all these little things. This guy, he doesn't live here. So we're just trying to ascertain for him. At this point in time, he's got $1.2 million of his own money and a loan that's on the books with the lender for, I can't remember exactly, I'm going to say 2.8, 2.9, 3 million, somewhere in there. So, you know, we're going to help him ascertain whether or not it's worth him to, you know, can we go to the bank and negotiate a note sale down to a level that it makes sense for him to keep the building and keep, you know, putting money into it, because he didn't want to throw good money after bad, right? So we're going to help him do that, and we'll front him at the bank, and you know, but right out of the box, you know, he's basically going to pay us a $5,000 fee for us to figure out the value, figure out the course of action, work. You know, we've already plugged him into, you know, a management company to, you know, well, with the promise of they'll get the management if they help us with the comps, etc. And this was the case. Remember, the bank wouldn't order the appraisal. And so if he decides to keep the property, then we'll move forward with him. I'll get paid, you know, if we're successful in negotiating a note sale down to the level at which we think it's going to take it to make sense and for him to stay in. And, you know, I mean, it all of it has to depend on the size of the loan, how big a discount did we get. But I mean, typically, you know, we'll charge somewhere between, and it's not really on a percentage basis. It's kind of like how much involved and stuff. But we'll charge anywhere from up $50,000 to $150,000.
Normally on a number basis as opposed to.
Yeah, not necessarily. I mean, there's some people that do it on a percentage of the savings. But like I tell the clients, I say, you know what? You know, I mean, we know you're not making money. You know, it's not like you've got a lot of money. But you know, we want to be compensated for our time. And do we like doing this? No, it's no fun. It takes a long time to sit down and
it's a blast.
Oh, yeah.
Jeremy, do you want to add a little to that too? What you're doing so much of it?
Yeah, as far as in response to your question, as far as the pricing goes, there's a process that my firm uses to determine whether or not we're going to accept the property. Because, you know, similar to Dell, we want to make sure that it's worthwhile to restructure the loan. So what we'll look at is the P&Ls for the last 3 years, rent roll with expiration dates, promissory note, mortgage statement, just standard financial documentation to determine, to be very frank with you, the leverage that we have with the special servicer. And leverage really is the key issue. Is this a secured, non-recourse loan, a recourse loan? What kind of liability does our client have? If we look at the property, then we go back to the commercial property owner and then say, yeah, we think we can help you. Here's what we're going to need. We're going to need an MAI appraiser to go out. It's going to cost you $3 grand. If you're local, I got a guy. It'll cost you $3 grand for that. The retainer is $7,500 retainer. 30 days after that, a $5,000 addition to the retainer, and then upon successful completion of the restructure, 0.5% of the original note balance. Sure.
Questions? In the back. Your name?
Waller, do you just work with securitized lenders and special servicers, or do you work with the popsicle banks, Bank of America, SunTrust, Whitney, whatever?
I'll work with any bank providing that I have the leverage sufficient to restructure the loan in a manner in which that will provide the commercial property owner a benefit. If I look at it and it's a non-recourse loan and I've been doing this long enough to realize whether or not I have the leverage or not, sometimes I'll say that your best case scenario is to turn the keys in. The other 80% of the time, I'll tell them, here's the angle, here's the crease, this is where we exploit them. And then typically when I go into dealing with a special servicer or dealing with a mom and pop bank, I'll want to deal with someone the senior vice president level and higher. And the reason for that is because, as everyone here probably is well aware, they have a committee that they need to go to. So what I'm looking for is one person outside of committee that has the ability to go to each individual and say, does this pass the smell test? Do you have any concerns? Yes, I need this reworked, tweak it this way, call it this, and then we restructure and to be frank with you, more often than not, it's 4, 5, and 6 proposals to get the job done because it takes tweaking at the senior vice president level to get the credit committee to sign off on it. Does that answer your question?
Yeah, well, other than the community banks rather than your securitized lenders.
As long as there's leverage. That's what I'm looking for, is leverage.
Would you elaborate on that, Jim Wells? We elaborate on that, Jeremy, as far as leverage.
When I speak of leverage, specifically what I'm looking for is the worst case scenario for the bank. Okay, if I have, I'll give you an example of a commercial property that I'm working on in Ohio that has a major defense contractor outside of one of the largest Air Force bases in the United States. The tenant, and the example that I gave during the demonstration was, the tenant said, we've been here a quarter of a century, we're paying prime, we have these units called SCIF, which is it's kind of like a bubble, I guess, for top secret clearance or whatever. So for them to move, it would cost them a very, very labor intensive and expensive process. But when I say leverage, what I'm really getting at is, can I go back to the special servicer and say, if you don't do this, here's what's going to happen. You're going to take a $10 million property and you're going to turn it into a $4 million property overnight. That's leverage. The onus is on you. This is non-recourse loan. My client's more than happy to turn the keys over. He's owned it for 25 years. He's refied it, made a substantial amount of money. If you want a non-performing asset on your books, you're more than welcome to have it.